Assalamualaikum warahmatullahi wabarakatuh. My name is NurAzleena binti and my mention number is 2020461524. In this video, we will present a financial statement analysis of Malayan Banking Berhad and Affin Holdings Berhad. Before we start our presentation, let me introduce my group members. The first one is NurAzleena binti Muhammad Yaakob. The second one is Izzati binti Wan Ailani. The third one is NurAzleena binti Samudin. And the last one, Nik Putri Syahira Balkis binti Zulkifli. So now, I will talk about the introduction. As we all know, bank plays a vital role in developing a progressive and inclusive financial sector, which means sustaining the pillars of financial stability at all times, guaranteeing adequate and efficient financial intermediation, and contributing to economic growth and development. In this report, we choose Malayan Banking Berhad and Affin Holdings Berhad to analyze and evaluate the performance of this bank by calculating a 3-year financial ratio, such as liquidity, leverage, activity, and profitability ratio.
Assalamualaikum warahmatullahi wabarakatuh. My name is NurAzleena binti Samudin. Now I will present about summary background of Maybank. Maybank, which stood for Malayan Banking Berhad and was established in 1960, is Malaysia's most important financial institution. Maybank is the leading provider of financial services in Malaysia. It also has extensive activities throughout Southeast Asia, and in 2014 it made a net profit of $1.92 billion. Maybank's total assets are more significant than $183 billion. The bank offers various financial services including internet banking, insurance, asset management, stockbroking, nominee services, venture capital, and leasing services. In addition, Maybank offers various financial products and services such as commercial banking, investment banking, Islamic banking, offshore banking, leasing and hire purchase, insurance, factoring, trustee services, asset management, stockbroking, nominee services, venture capital, internet banking. Furthermore, Maybank is the firm that has the highest market capitalization on the Malaysian Stock Exchange or Bursa Malaysia. It is ranked 1 among publicly traded nation corporations and is included in the top 500 of the Forbes Global 2000 list of the most successful companies in the world. Next, I will present about summary background of Affin Holding Berhad. Under the name IMA Sdn Berhad, Affin Holding Berhad or AHB was established as a private limited company in Malaysia on May 31, 1975. It began as a lending institution offering hire purchase finance for automobiles. It changed its name to Affin Motor and Credit Finance Malaysia Sdn Berhad on September 15, 1978. On 16 January 1979, it changed its name to Affin Credit Malaysia Sdn Berhad, and on 2 March 1991, it became Affin Holdings Berhad. On May 6, 1991, it was changed to become a public company and given its current name. Through a series of mergers and acquisitions over the past 10 years, AHB has undergone significant changes in its group organizational structure to maintain its position as the flagship financial services subsidiary of its largest shareholder, Lembaga Tabung Angkatan Tentera or LTAT. The Affin Group is an essential local provider of financial services, commercial, Islamic investment banking, money broking, fund management, and general and life insurance underwriting comprise the group's critical operations. Lembaga Tabung Angkatan Tentera, the nation's largest superannuation fund manager for military services, is the largest shareholder in Affin Holdings Berhad.
Assalamualaikum, I am NurAzleena binti Muhammad Yaakob. I am presenting to you industry and strategy analysis of Maybank. Following economic analysis, the subsequent step in the economic analysis process is industry analysis. After conducting an industry analysis with Porter 5 Forces model, investors can utilize the data to choose which stocks from which industries should be included in their portfolio. Porter 5 Forces is a framework for industry analysis and corporate strategy development developed by Michael E. Porter of Harvard Business School in 1979. Porter 5 forces include 3 from horizontal competition, which refers to rivalry from external sources, the threat of substitute products, established 32 rivals, and new entrants, and 2 from vertical competition refer to internal threats, supplier and customer bargaining power. First is the threat of substitute products. When more replacements are accessible, buyers have more choices, which increases price elasticity. Maybank's products, such as loans and savings, are comparable to those of its competitors. Thus, Maybank must truly research new products and services, including pricing and charges. Second is the threat of established rivals due to debt deregulation. Foreign banks, including UBS, BNP, Al-Rajhi, Standard Chartered, and Hong Leong, now compete with Maybank. Maybank has begun to create a strong presence in other countries like Singapore, Indonesia, and others by focusing on core business activities and segmenting products and services to accommodate industry diversity. The third is the threat of new entrants. Maybank has several advantages over new market entrants. Over 50 years, Malaysians have grown to trust Maybank. Maybank to you is patented by it. New competitors trying to compete with Maybank must have a large capital requirement, which have given the Maybank Group an advantage. Fourth is the bargaining power of suppliers. It necessitates by supplier collaborations between manufacturers and raw material suppliers. Maybank end-to-end services reduce supplier negotiation power. Additionally, Maybank functions as a one-stop financial facility where 35 consumers can acquire all financial services conveniently without relying on third-party actors or suppliers to make it happen. Fifth is the bargaining power of buyers. Maybank customers have several financial service options and are price sensitive, giving them tremendous negotiation strength. Malaysian customers can compare bank fees and choose the cheapest. However, in some markets, clients are less concerned with fees and more about Maybank's better convenience. Next, we go through a SWOT analysis. The strength of Maybank is, first, it has the most number of branches in Malaysia. Second, return on assets and equity are well above industry and sector averages. The weakness of Maybank is, first, due to the concentration of banking operations in and around Malaysia and Singapore. Worldwide penetration is limited. Second, most revenue is generated by retail and Islamic banking, while other offers generate the remainder. The opportunity for Maybank is once it receives its operating license, there is a significant chance to expand into nations like Laos. Second, the expansion of internet banking will increase the number of customers. Lastly, the threats of Maybank are changes in the economic policy of Southeast Asian nations that will have a significant impact on the bank. Second is current global macroeconomic conditions impacting the bank. Next, let's move to the strategic analysis of Maybank. We have 6 strategy analyses: political, economic, social, technological, environmental, and legal. In politics, Maybank founded in 1969 and owned by the government under the GLC transformation program is held by Khazanah. Since 1969, Maybank has experienced fast value growth due to industrialization. As a government-linked enterprise, the bank benefits from policies that have helped it get to where it is today. In economic, the current state of the economy is advantageous to Maybank. The bank's liquidity is indirectly increased by the BNM overnight policy rate change, which enables it to increase its loan portfolio and extend credit to more people, thus growing its customer base. A growing economy creates more business opportunities, boosting demand for banking goods and services and opening the bank door to growth. In social, Maybank establishes foundations that help the region, including the less fortunate citizens of developing nations, to thrive as a sustainable banking leader in Malaysia. One of the foundations for creating a culture that produces chances and objective accomplishment with economic value is the Maybank Foundation. In technology, e-banking has become a competitive advantage in today's culture since it reduces the time required for transaction, investment information, online registration, and other activities. One of the most popular web banking websites among rivals is www.maybank2u, which makes Maybank one of the best operating banks in Malaysia. Then, in terms of environmental factors, Malaysia has one of the lowest disaster rates, the lowest levels of pollution, and only one season throughout the year. However, Malaysia is one of the urbanized nations shielded from tsunamis by its neighboring nations, allowing Maybank to take advantage of these benefits and reduce its worries about problems brought on by natural disasters. It is one thing that draws FDI from abroad to this country with a stable political climate. Lastly, in legal, the legal environment has an immediate effect on Maybank. Maybank broadened its operations outside of Malaysia as part of this expansion. New laws like the Whistleblower Protection Act of 2010, the Anti-Competition Law of 2010, and the Personal Data Protection Act of 2010 directly affect the bank and force it to change its processes and procedures to ensure compliance with relevant laws. That's all for the industry and strategy analysis of Maybank. Now, I will pass the presentation to Izzati.
Hi, Assalamualaikum. My name is NurAzleena binti and my matric number is 202082886 and 38. I will explain to you the industry and strategy analysis of Affin Holding Berhad. The existence of 5 factors that determine a company's level of competitiveness is assumed by Porter's model of competing forces, which is based on the idea that competing forces exist. Michael Porter identified five different types of competitions, which is a threat of new entrants, a threat of substitute products, a bargaining power of suppliers, bargaining power of buyers, and intensive rivalry among existing players. For the first point, threat of new entrants, the key factor contributing to the barrier to entering the industry is the policy and regulations imposed by the government. However, the new entrants' capability to compete in this highly competitive industry may be seriously compromised if current entrants are provided exclusive right to certain projects. This is because current entrants already have experience in the industry when it comes to building a corporation with a high capacity for competitiveness in its field. Capital requirements are typically crucial aspects that must be considered. For the second one is threat of substitute products. The banking industry faces some of the gravest threats to its continued existence, not from other banks but from non-financial business that compete with banks. Although the industry is not in danger of being replaced in terms of deposit or withdrawals, non-banking organizations do provide a variety of banking services such as insurance, mutual funds, and fixed income securities. These are just a few of the many banking services available. The third one is bargaining power of suppliers. Capital is the most important resources for every bank, and the banking industry is dominated by four principal providers of capital, which is customer deposits, mortgage and loans, mortgage-backed securities, and loans from other financial institutions. The next one is bargaining power of buyers. The individual doesn't face much of a threat to the banking industry, but height switching costs are a big reason why buyers are not as powerful as they could be. It can be a significant inconvenience for a person to switch banks if they already have a bank that handles all of their financial needs, such as their mortgage, savings, and checking accounts. Last but not least, intense rivalry among existing players. Financing services have been around for a long time, and most people who need them already have them, so banks have to work hard to get customers away from their competitors. They do this by offering affordable loans, higher rates of interest, better investment services, and more convenience than their competitors. When banks compete, they often try to see who can offer the best and fastest services. Next, I will explain about strategy analysis of Affin Holding Berhad. First, political is where the laws and regulations illustrated the industries in terms of licensing and in connection with the Ministry of Finance and BNM. Political strengths can impact the finance and banking industry of a nation in duration of monetary rate, investment and loan payoff. For economic, monetary policy committee forecast ascending numerals for a loan request, especially domestic-oriented industry and economic transformation program (ETP) project related. Next is social, where the growth rates of the duo that comprises or more demands in loans, especially housing and car loan. Next, technology for Affin is they use internet banking, phone banking, and cash deposit machine. Next is environment. The central bank has endorsed a high-level framework to advance economic and financial integrations, and the Commercial's banking component is projected to maintain an annual growth rate of 7% over the next 10 years. Last but not least is legal. The commercial's banking segment is projected to maintain an annual growth rate of 7% over the next 10 years.
Assalamualaikum warahmatullahi wabarakatuh. I am Deputy Syarah Balkis binti Zulkifli. I will present about comparative analysis on Malayan Banking Berhad and Affin Holding Berhad. Firstly, we go through Malayan Banking Berhad. As seen in the cash flow analysis above, the cash flows appear to be continuing in the same direction. The following cash flow components have been considered: operating cash flow, investment cash flow, and financing cash flow. As we all know, cash flows are the lifeblood of business, and it has been demonstrated on occasion that the cash flow may sustain a corporation prior to making any long-term investments. Operating operations for 2019 indicate a positive sum and a positive net growth in cash and cash equivalents, even after accounting for investing had financing cash flow. This trend is also shown in the profitability ratio, which is comprised of the net profit margin ratio, gross profit margin ratio, and operating profit margin ratio and whose trend appears to be stable year over year.
Thank you, Putri. I am NurAzleena binti Maybank. I am presenting to you a financial ratio analysis of Maybank. There are 4 ratios: liquidity, leverage, activity, and profitability ratio. First, we look at the liquidity ratio. The liquidity ratio determines a company's ability to pay off its short-term debt obligations. Generally, the higher the ratio value, the larger the margin of safety the company possesses to cover its short-term debts. In the liquidity ratio, we have the current ratio and working capital. For the current ratio, the formula is current assets divided by current liabilities. As seen in the table in the slide, with a current ratio of 1.20 times, 2021 is less liquid and does not appear to be in a better position to repay its creditors. The current ratio is lower in 2021 than in 2020 and 2019. It was primarily due to a substantial increase in current liabilities, such as customer deposits, which increased from 544 billion, 530 million, 912,000 Malaysian ringgit in 2029 to 588 billion, 967 million, 633,000 Malaysian ringgit in 2021. For working capital, the formula is current assets minus current liabilities. The table in the slide shows that Maybank can pay off its short-term liabilities because of positive working capital. Maybank did not operate most efficiently in 2021 because the working capital was lower in 2021 than in the prior year. It was primarily due to high account receivable from 512 billion, 291 million and 92,000 Malaysian ringgit in 2019 to 540 billion, 839 million, 323,000 Malaysian ringgit in 2021. Then, we look into the leverage ratio. In leverage ratio, we have debt ratio and debt to equity ratio. For the debt ratio, the formula is total debt divided by total assets. Maybank seems to have higher financial debt because the ratio is more than 50%, meaning it has more debt than assets. Since 2019, the overall debt has been steadily increasing. Maybank's total debt climbed dramatically in 2019 from 750 billion, 343 million, 791,000 Malaysian ringgit to 799 billion, 690 million, 972,000 Malaysian ringgit. The formula for debt to equity ratio is total debt divided by shareholder equity. Maybank seems to have a high debt to equity ratio associated with high risk, which may mean that it has been aggressive in financing its growth with debt. Since 2019, the overall debt has been steadily increasing. Maybank total debt climbed dramatically in 2019 from 750 billion, 343 billion, 791,000 Malaysian ringgit to 799 billion, 690 million, 972,000 Malaysian ringgit. It might be risky for Maybank if they do not try to minimize its debt. That's all from me. Now, I will pass this presentation to Shahid.
Thank you, Ms. Akila. So, for now, for the activity ratio, the cash turnover ratio for Maybank decreased because the total amount of sales has been falling gradually since 2019. Meanwhile, sales for Maybank sharply reduced in 2019, going from Rm 52,868,000 to 45,959,000 in 2021. Besides, the account receivable turnover also decreased from 0.8 in 2019 to 0.7 in 2021. A high ratio is desirable because it indicates that the company's account receivable collection is efficient. Therefore, the declining pattern shown in the table is not a good sign for the company. Next, for the profitability ratio, the gross profit margin increased in 2019, going from 0.54% to 0.72% in 2021. This indicates the business can manufacture its goods effectively.
Now we go through Affin Holdings Berhad. Affin Bank's net cash flow in 2021 is higher than 2020. Additionally, Affin Bank is performing well since its net cash flow is significantly higher than its 2019 net cash flow, catering to various product segmentation. This strategy also divides pool of capital for further company to group. Additional years of the financial experience for proven credibility and reliability as a sound banking and financial institution. The great degree of appeal to government sector and have strong current ratio in meeting short-term in financial position give strength in this company. That's all from me. Thank you.
Now, We move to financial analysis of Affin Holding Berhad. Start with liquidity ratio. First, we calculate and analyze the current ratio. In 2019, the corporation funds met its short-term obligations since the ratio was more than 1.0, which is 1.19 times. It indicates current assets exceed current liability. As seen in the above table, 2020 with current ratio of 1.22 is more liquid and appears to be in a better position to pay its creditors. It was mainly owing to significant growth in the item of total current assets such as cash and short-term funds, which climbed from Rm 4605357,000 in 2019 to 5461365,000 in 2020 and increased to Rm 6394457,000 in 2021. Next is net working capital. Based on the table above, we can see the net working capital constantly growing from 2019 to 2021. It is mainly due to the increase in current assets from 2019 to 2021 from Rm 639,996,522,000 in 2019, Rm 67032,829,000 in 2020 to Rm 74717744000 in 2021. A business with a significant net working capital can often satisfy all its short-term financial commitments. Thus, the company's working capital was efficiently operated. Next is the leverage ratio, which is debt ratio. Since 2019, the debt has been steadily increasing for the past 3 years. The ratio is above 50%, indicating that Affin's bank's debt exceeds the assets. It is mainly because the company's total debt climbed dramatically between 2019 and 2021 from Rm 58944,669,000 to Rm 6849541,000. It indicates that this company has affordability to service the obligation of the company. The other ratio is debt to equity. To analyze a company's financial leverage, the debt to equity ratio is computed by dividing its total liabilities by its shareholder equity. A high debt to equity ratio is often linked with high risk, which may indicate that the corporation has used debt aggressively to finance its expansion. It can be proven by the chart above, which shows that the debt to equity ratio decreased from 2019, which is 631.29% to 626.12% in 2020. Unfortunately, the ratio dramatically increased to 692.64% in 2021. Next is activity ratio. First, cash turnover ratio. Inventory turnover analyzes how frequently a business changes its inventory to its cost of sales. The inventory turnover ratio for sales at Affin Holding Berhad appears to be high, indicating either solid sales or insufficient inventory to maintain sales at that rate. The total amount of sales has been rising gradually since 2019. Sales for Affin increased sharply in 2019, going from Rm 47319,853,000 to Rm 728,671,000 in 2021. Second, receivable turnover ratio. We can see from the table above that from 2019 to 2021, the receivable turnover ratio increased steadily. A high receivable turnover ratio can indicate that the company's collection of accounts receivable is efficient and that it has a high proportion of quality customers who pay their debts quickly. It is shown when the ratio increased from 0.10 times in 2019 to 1.01 times in 2021. A high turnover rate for accounts receivable may also indicate that the business runs on a cash basis. The last ratio is profitability ratio. First is net profit margin. The net profit margin of Affin Holding Berhad increased steadily, indicating that the corporation with a high net profit margin can successfully manage its costs and offer products or services for a price much higher than it costs. The net profit margin increased in 2019, going from 0.87% to 1.34% in 2021. Second, return on asset. Return on asset measures a company's profitability to its total assets. From the table above, we can see that the return on asset ratio has remained from 2019 to 2021 at 0.03%.
For the conclusions, my explanation would be divided into two parts, which is strengths and weaknesses. First, I will explain about strengths and weaknesses of Maybank. Maybank's strength is shown in the liquidity ratio, where the current ratio over the past 3 years is above 1. The net working capital also shows a positive amount, which means that Maybank is able to pay off its short-term liabilities. Besides, the profitability ratio is comprises of the net profit margin ratio, gross profit margin ratio, and operating profit margin ratio, whose strength appears to be stable year over year. For the weaknesses, we can see on the activity ratio, the company shows a declining trend from year to year. A higher cash turnover ratio is preferable because it indicates a higher frequency of cash replenishment revenue. In addition, according to the leverage ratio, which consists of the debt ratio and debt to equity ratio, practically all of the firm's liability appears to be paid by assets. When we examine the trend, we can notice the ratios is in an increasing pattern. This demonstrates how the company may use much equity to service the loan, and the shifting trend adds to the uncertainty in this circumstance. Next, I will explain the strengths and weaknesses of Affin Holding Berhad. We think Affin is a good company since they have 3 strengths compared to Maybank. Affin has a good performance based on its liquidity ratio. It can be proven by the current ratio that shows a good results higher than 1. It indicates that Affin easily meets its short-term financial obligations from its current assets. Besides, the net working capital also shows a positive amount over the past 3 years. Moreover, the activity ratio of Affin for both ratios, inventory and receivable, is constantly growing from year to year. It indicates that the company is using its total assets very efficiently. Now, I will explain the weaknesses of Affin. According to the leverage ratio, practically all the firms' liability appears to be paid by assets. Rapid adjustments in interest rates might imperil these business operations. When we examine the trends, we notice the ratios are increasing, which tell us that it is not a good sign for the company to maintain its good performance in the future. That's all from us. Thank you.
Next is recommendation for Malayan Banking Berhad. As the equity ratio shows a decrease from year to year, the Malayan Banking Berhad can increase its asset turnover ratio in various ways, such as by increasing revenue, improving inventory management, and probably computerizing inventory and order systems. Besides, since Malayan Banking Berhad faces difficulties in its leverage ratio, it should lower it by restructuring debt. If a company's loan interest rates are relatively high and current interest rates are much lower, it can refinance its existing debt. It will lower interest and money payment while also boosting the company's working capital. Next is the recommendation for Affin Holdings Berhad. Same as the Malayan Banking Berhad, we would also like to suggest the company to restructure the debt since the leverage ratio for both debt ratio and debt to equity show the poor result and might expose the company facing the bankruptcy in future.